Well, let's get across the market open now. Kyle Ryder joining us from capital.com. Kyle, welcome back. Lots of news to get across from early this morning. The Fed making its decision. Bit of a split there just in terms of the outlook for some of the policymakers and also four of the Mag 7 reporting as well.
Yeah, indeed. I mean, it was, I suppose, a deluge of information data to really sort of test this bull market on Wall Street. And I think that, at least from the central bank perspective, the decision last night doesn't do anything to increase certainty about the Fed's outlook. And I think ultimately that's what this meeting was about. Obviously, it was going to be very unlikely that policy was going to be changed meaningfully. But the two things effectively that the markets were looking for was an assessment of the Fed's reaction function, how it plans to respond to this inflation shock coming down the pipeline. And then the other side of that too, or the second thing the markets were looking for was a little bit of certainty about Powell's future. We got a little bit of certainty there on that particular subject, but it hasn't completely cleared things up. So with the dissents there, with the fact that the leadership is about to change and therefore the policy bias, at least when it comes to the way that the chairperson directs the Fed going forward, or what direction the Fed goes going forward, lacks a little bit of clarity. It all suggests here that policy uncertainty is greater than it was before this particular meeting, that we might see a little bit more volatility, at least in bond markets as a result of this. And this is something that can obviously weigh on equity prices as well, all else being equal. So overall, in terms of policy changes, it was a bit of a nothing burger. But again, that dissent really shows that division, and that division will mean, probably a little bit more uncertainty about policy going forward.
Yeah, a lot of this clearly hinging on where inflation goes, particularly in relation to what's transpiring in the Middle East. And on that front, President Trump rejecting Iran's proposal to reopen the Strait of Hormuz. Trump saying, look, they've got to solve the nuclear issue in Iran.
Yeah, and despite, some of these headlines coming through at different stages that, both sides are coming closer to a deal or as far apart as it might seem to a deal, there still is the critical issue of uranium enrichment, and then also the control of the Strait of Hormuz too, as a secondary to that. And the other big headline yesterday that really started to see the oil complex move upwards was this report that the way that the US is expecting to handle this isn't through greater hostility from a military perspective, but really enforcing that blockade for as long as necessary and taking this kind of boa, constrictor approach to the Iranian regime, which is try and suffocate it as much as it possibly can economically and force them to the table to make a deal, reopen the strait, cripple them that way. So the fact that we could be seeing the global economy getting closer to this sort of proverbial supply cliff as the deficit in the market that has been building since the closure at the end of February really starts to be felt in the next couple of weeks. That's putting a real premium into oil prices, and it was responsible for that big jump that we saw overnight that saw Brent back towards the sort of $120 mark, not quite, but sort of in the one teens, so to speak, and maintaining this kind of inflationary risk and downward pressure on economic growth potentially that comes from an energy crisis.
And that clearly is going to be a consideration for the RBA too, Kyle, when they make their decision next week. That comes off the back of that inflation data we saw yesterday. What are you seeing as far as market pricing for the likelihood of another hike?
Well, the odds dropped at the margins of a rate hike next week only because the headline number was a little bit lower than expected. But, critically, the trim mean was, as expected, 3.3%. It still seems to be on a trajectory above what the RBA forecast in previous statements of monetary policy. And that suggests that obviously it's a matter of, when and not if the RBA hikes interest rates. And because the labour market really doesn't seem to be an impediment at this point in time to raising interest rates, the balance of risks is skewed towards another rate hike next week. Again, even though we saw the odds of that drop marginally because of what was a smaller than expected jump in absolute terms, a very, very big jump in headline inflation. So I think everything's in order more or less for a rate hike. Last meeting was all about timing as well. When should the RBA hike, effectively first? I suspect this will be a similar discussion at this upcoming meeting. And I again suspect once again, because of the balance of risks to the economy, that decision will be to raise interest rates.
Now, Kyle, also some very big results on Wall Street overnight as well. We've got Amazon, Alphabet, Meta, Microsoft. What do we glean from those results?
Well, the first thing that I glean is that, we do have US futures jumping this morning, and that was after some, jitters going into the close because we had this event risk after the bell. And then obviously we had a little bit of that volatility caused by the Fed. But so far, the results, as we kind of come to expect, were pretty good for the quarter across the board. And I'm generalizing across the four companies that have reported. But we have seen, fairly fierce responses so far, and say Meta shares because of, a flagged increase in capex. I think the number's about 7 or 8% increase. That seems to be prevailing across the other Magnificent Seven companies as well. That, from what I see as being this kind of, race to the bottom, if you will, to try and outspend each other. Bit of a prisoner's dilemma, more or less. That there is this real need to try and continue to up capex to again outcompete these other major players in the AI space. But despite sort of capex and reduced free cash flow being in the past a theme that has led to a bit of a sell-off in these stocks, at least so far, Meta separated in particular because it has dropped after the closing bell. Futures and NASI futures are up by about almost 1% or as much as 1% in the initial stages of Asian trade. So we'll see if that holds, because again, that capex story is significant. It shows that there is still, again, this kind of arms race going on, which mechanically will, lower expected returns on investment and therefore compress, valuations on some of these stocks. But once more, there still is very strong profitability. There still seems to be a very strong desire to buy into these companies at this point in time. And the initial price reaction, assuming it holds, says basically the results were good enough. But again, we'll have to wait for the next 24 hours and a session of cash trade on Wall Street to really get a better sense of things.
And Kyle, what are the expectations for Asian trade today?
Well, because of that lead in US futures, it looks like we might pick up a little bit, certainly define maybe some of the sluggishness and volatility that was being implied in futures prices and futures markets. But, we still have a pretty big 24 hours ahead. We're not sort of through the out of the woods yet when it comes to the really massive 24 or 48 hours of event risk that, markets were confronting going into, well, today effectively. ECB tonight, their guidance will also be important. We've got the BOE as well. And then we've got Apple tomorrow, which is less of an AI story because they've kind of decided not to participate in the arms race, but still it's going to be important for sentiment when it comes to future earnings. And then we'll be looking at things like China's growth and things like that implied within Apple's results. So it still could be a fairly exciting, to say the least, 24 hours. And of course, we'll also be trading on headline risk as well relating to the war. So and end of month too. So lots of opportunity there for pretty elevated volatility over the next, well, to round out the week.